All right, good morning, ladies and gentlemen. Today is Wednesday, June 30th, 2021, and I'm back with another edition of the live show. I forgot to start the little intro thing. I was sitting here doing some stuff and I had the little intro queued up, but I forgot to have it on the screen, and so we're just starting off with a chart of the good old SPY with a trend line on it, which you can see basically got tagged. Well, I guess that was a couple weeks ago, a little over a week ago. It came down, and we had a little bit of a sell-off there in the index. Now, honestly, when the index sells off, a lot of individual stocks sell off pretty much. But there you go. You can see the basically how that trend line works. Interestingly enough, the trend line starts like basically right on the at the high of that day that was the low. I really wanted to get the trend line between these two lows here, the one from back in late October and early March, the fall and the spring, which are kind of the only, two little dips that we've had. They're the lowest points on the chart, put it that way, going back a ways. So I wanted to connect those two, and then I found that if I extended it all the way back to the pandemic low of last March, that it intersects basically with the high of the day that the low was made back there. You can kind of see that. So anyway, that's about as good as a trend line as you can draw on the old SPY. And on SPX, it's actually a little bit different on the S&P index. But so as long as the market is going from the lower left to the upper right, as they say, and obviously, the trend is up. Back over here, let me go back just a little bit further. Yeah. So off of the lows, I mean, there was quite the rally, right? Got extremely extended, and then there was this little sort of W here, and and then basically, the market's held well above this whole area here. And the thing about right now is it seems like, I mean, it seems kind of like summer trading has sort of set in, right? Now, of course, we are on this little upswing here. There was a little bit of a pullback and right back on the upswing, and sometimes these things go further than anyone expects, but yeah, basically as long as the S&P is above this trend line, then everything's about normal. So let's look at the Qs real quick here. Go back a ways on the Qs. I always like you gotta zoom out the chart. At this point the best sort of reference, I guess, for where the market is obviously the last March, the low of that big sell-off. And wow, this this current little rally in the Qs is pretty persistent, but and so I mean you can look at this close up and say, wow, it's really on a tear, but you can see back here in all these other places that the market can go on one of these tears and just keep going for a ways. So it's kind of weird right here, like in last August into September, it seems like it went parabolic, got really sort of extended right before it fell a little bit, but so not much to I have been reading, and I haven't really looked at this myself, that the breadth of the overall market is not all that great. The number of Nasdaq stocks that are making new highs, with the index at new highs, the number of Nasdaq stocks that are making new highs is minimal, and there's a lot of them that are not above their 50-day moving averages. So whatever. I mean, it seems like for the past couple of years, the major indexes have been a function of the mega cap stocks, right? The FANG stocks basically driving everything. And I know in the NASDAQ 100 that a handful of stocks is about 25% of 25% of the index. The rest of them don't matter so much. And it's kind of the same way with the Dow. I suppose you could look around at these different indexes or indices, however you prefer to say it, and see some little divergences. For one thing, the Dow has kind of leveled out and is sort of trading sideways here, looking a little weird compared to the S&P and the Nasdaq, right? And then the big one, to me anyway, is the Russell, right? The Russell 2000, which I like to use IWM. I suppose a dollar sign RUT would be the symbol here. So I'm not all that up on the stock charts nomenclature for their symbols and that. But anyway, you can see the Russell 2000. This is kind of interesting. It ran up in January and then ran up again in February, and it's like literally it's like gone nowhere since February. So that's kind of odd. That's a little bit of a divergence. It's just sort of trapped in a big giant range here, and it's not really moving up at an angle like the S&P or the Nasdaq. And so, of course, this is 2,000 smaller stocks, and one of the big themes over the past couple of years has been that the the larger cap and especially mega cap stocks have been the leaders, and they have the highest weighting in the indexes and all that. And so, under the surface, I guess if you look at this Russell 2000 here, it's kind of a mixed bag, but definitely a market of stocks, which is kind of a funny thing, but it's true. So, sectors come and go, and on a day-to-day basis, certain energy's been pretty strong. Oil's over $70 a barrel. Gas here's finally gone over $3 a gallon. So it was under three for a long time, even when there was that gas shortage back in May. So I just noticed that it's like gas is 301 here, which is cheap compared to some places I've seen. But anyway, so we have a pretty good list of open trades going right now, as you can see, and a few of these have just triggered in. Couple of them have couple of them have been open for a little while, and then these three at the bottom here have been open for over a month each, and you can see that they've got some pretty respectable gains. In other words, they just the trend on these is continuing to rise. They're going up. And so the system is going to stick with them. So I thought we would take a look at these and look at the charts. The funny thing is, we'll start with the top one, this JO here. Okay, so let me get my charts all dialed in here. There we go. Yeah, this one's always been kind of weird. It shows up on the list. I think last time there was a trade in this. It did pretty well. You can see that it was somewhere over in here, probably right back in here. I don't remember. I was using a different charting platform at the time, but there was another trade in here that did pretty well, I believe. And you can see right here that this one, I've never been a huge fan of this, and every time I say that, it ends up working out pretty good. But one of the reasons, and this is, by the way, this is, coffee. This is an ETN that theoretically represents the price of coffee as a commodity, and it does have some pretty decent price movement. I mean, it moves, up and down. So you can see this little dip here, and then theoretically, like this trigger was kind of above these highs here on this long range day, and so this is the day that it closed above the trigger of 43.80, and then of course the next morning it gapped up, and so basically you're talking 80 cents from the trigger to the open this day was 80 cents, and that's what these targets are about. So so this day where it triggered in made a really nice move. I mean, that was a pretty substantial move that particular day, and but didn't quite make it to the target that compensated for the difference between the theoretical entry here and where the trigger price was. So and of course now it's given a little bit of it back, but yeah, still looking okay. It's basically, well, it's a little bit below the entry right now, but theoretically, ideally, I should say, what this stock likes to take, like, 3 steps forward and then 2 steps back. And then you get a big move up and a little bit of a retrenchment, and so you can see how that worked out on the way up over here. So if if I'm looking at this chart, and boy, I wish the one thing about these stock charts that I'm using here is that drawing trend lines and drawing stuff on the chart in real time is a little bit tedious. It's a little bit of a challenge, so I don't usually attempt it live on the show, but picture me drawing a trend line right over here, like on the left side of the screen. If I drew a trend line down across that um, pullback there, and then it was off to the races, and we have a very similar pullback here that you could just draw a trend line down across the highs of that pullback, and so you got a very similar setup, right? And so theoretically, we may see, now we've already had a pretty good move up, so we may see a little bit of a retrenchment and then a continuation in the trend. So there's a lot of symmetry to the chart between the last sort of pullback and trend move and what we're seeing right now. So we'll see what happens with that. As of right now, it's just kind of hanging back. Boy, it was off to a big start, but you see, it had already moved fairly considerably off of the low there of the pullback, and so the trailing stops come up a little bit. We'll have to see what happens there. Moving down the list, next we have this one, Fresh Pet, which is just kind of hanging out here. Here's another one that triggered in really weird, right? See, the thing of it is the system calculates, the trigger price as, like, that's basically the level that the stock needs to close over in order to confirm the change in trend, so to speak, like off this pullback, and then you got like this little change in trend, and so this was the price, down here, but obviously the system, we have no control over the actual behavior on a day-to-day basis of what a stock's going to do. And so here's a case where basically, we were looking for a close over 165.70 to trigger this in. And, ideally 166 would have been a great place for it to close, and then the next day, but the market does what it wants to do in individual stocks. And so this day is another day where, basically it triggered in on a long range day and then gapped up the next morning. And so in order to compensate for that, and typically this is a high price stock, and that was a pretty big difference between the trigger and the actual entry. And so, but typically the ones that work, they work, and so it doesn't really matter that much. But you can see up here, so this is the target that the system shows, and then this is the target that you would use if you decided if you got filled right up here up here at the open the following morning. So a lot of times, you can use some discretion there. You can choose to use a little bit of discretion when it comes to gaps, especially. And a lot of times, I mean, this is something we've talked about for years, but a lot of times, if you a gap higher after a long range day tends to fade. Not always. Sometimes you get a long range day, and then it's just continues to rip higher right from there. And so, if you don't get in, then you missed it. And I've seen ones that just like this that just take off from there, never look back. So, but anyway, long story short, you can use some discretion on the entries. Generally speaking, if the gap seems pretty significant, then it's not a bad idea to take a half a position on the gap and then set a limit for the other half. For good till canceled, let it go for a few days. In which case, if you took two positions in this, you'd have an average cost down here, and then you could basically adjust your target, your compensation target for the difference between your average price and the trigger. And so that's basically how to sort of maintain the it's all about the compensation target because that's where you're going to take half off the table. So that's what the target's all about. So not all of them get filled really like that. It's just a matter of, the fill. It's a matter of what the market does, what the stock does on a particular day. So here we are. These have only been open for a few days here. So here's a case of one that basically I haven't drawn the target on here, but the target on Sienna is 60. It's right up here, $60 even. And just for the fun of it, I'll go ahead and draw that target on here so you can see how this works. So the first thing I do is come up here and I go and I pick this color, and then I click up there, and I mean it's not really that difficult to do, but it's kind of odd. I put that on there, and then I have to go down here and hit to a note, and then I change this color and click up there, target 60, and I hit save. And here comes the tricky part. You can't see this on the screen, but there's a little save button up here. If I forget to go through that step, then whatever I drew on the chart disappears. And something else that's kind of weird is like you'll see this when we get to the very last stock on this list, Twitter. I must have like updated a stop or something because I went through here and updated the stops yesterday. I think it was yesterday. And then so this morning I go to update the stops again to prepare for the show, and all my marks on Twitter are gone. And I can't figure it out because if I added something to this and forgot to save it, next time, like say tonight, I went and changed something on this chart. It shouldn't get rid of everything that I had previously marked on there, but lo and behold, everything that I had on the Twitter chart was gone this morning. So that's kind of weird. That's the only thing, well, one of the little things that I don't particularly care for about these charts. But then again, I've been through all the reasons why I had to switch over, and I mean they're nice charts. I can do some stuff with them, but I could theoretically recommend quite a few little tweaks they could make to these charts. One that really drives me crazy is the price scale. Like the price scale. The price scale is I would like to see it more dense, or the ability to control it a little bit. And the same with the time scale, right? You do some weird stuff on here with the time scale, and if you zoom in or out at a certain level, like the months or years disappear, something weird like that. So, but anyway, so there you go. Um, yeah, triggered in, and it's just kind of pulling back a little bit here. Not a huge big deal. The initial stop is still hanging in there, and hopefully just a minor little dip here, and it'll find its footing and then resume a trend higher. The chart, I mean, the chart looks okay from sort of a longer term perspective. So you get, it's kind of like you get a earnings gap up and then a little dip, something similar to over here, gap up, a little bit of a dip, and then a move back, a move right back up to the previous high where it ran into resistance. So if we see something similar to that, then be okay. So you can never really tell. A couple of days into this, it's looking kind of ugly, but no big deal. I mean, it's all about this pivot low holding right here. So the pivot low of this little pullback here, it's all about that holding. So no big deal. Those are the three newest ones. The ones that have been open for a little while, now we're getting into those, are looking a little bit better. So this alarm, excuse me, alarm.com, got a pretty good look to it. You can see the trigger was back over here, and initially this one actually triggered in like right at the trigger price. Now watch what happens when I try and move this over a little bit. So you see if I try and do anything, like this whole panel opens up, which is, if it I don't know. It just I suppose, well, no. I was going to say I suppose I could adjust for that, compensate for it by making this whole thing wider on the screen, but then what happens is anytime I touch anything in here, it's going to draw something. So, anyway, looking pretty good here. The the target's still a ways up. Target's still got a little bit to go. This trailing stop's really hanging back a lot. I had to, let me double check that. 81.20, yep, 81.25. So, as I mentioned just about every week on the show here, basically the idea of this trailing stop is, and this may move up a little bit tonight. It's a function of price and time. But the idea is that, it wants to hang back. Everything's based on the ATRs. And so it's still hanging back a little bit to allow for, a few days of a normal type of pullback that this stock might see without getting knocked out. Now, obviously, if that was the extent of the rally and it just comes all the way back down, then, it's nice to have that trailing stop tightened up there. And so that's sort of the idea of it. So, and this still looks great. Quite honestly, it's forming like a big sort of cup, and so a little bit of a retrenchment would seem normal here. And this, if the stop like tightened up to right around the trigger price or whatever, that'd be fine too. And so that may actually happen. We'll just have to see over the next couple of days, because like I said, everything's a function of price and time. And so the trailing stop is gonna, when the price makes a movement like this little upswing that it just had, the trailing stop doesn't just boom, 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 ratchet up to stay right with it. It's gonna hang back and allow, you know, sometimes it's all formulas, but what I've noticed is that a couple of days can go by. The stock can make a big move higher, and then a couple of days goes by before it starts to really tighten up. And then there's some logic in there that when there's a really big move, like a parabolic move that goes on for some time, the stop actually tightens more aggressively, I suppose is how you would describe it. So So anyway, this one's looking pretty good. As of the close last night, it was up about 6%. Now it's down a couple of percent here. But so far so good. And the fact that the stop has been able to ratchet up. And these don't necessarily start from where they ratcheted, just because it looks kind of odd, doesn't it? But it's I think it's close. So there's a lot of potential here for for a pullback back into this sort of zone here between say 83 and 84, 85 or whatever. But as long as it just maybe pulls back a little bit and resumes its trend, it's looking pretty good. So then moving on, we have Pfizer, which is sort of going nowhere, right? Surprisingly enough, it's kind of interesting. I just saw something the other day that said that Pfizer's going to have like $100 billion or something crazy like that, or $100 million in profits on their vaccines over the next X amount of years or something. So you would think, and this is the kind of market that we're in, obviously. Um, Sort of defies logic. Half the time, I think that the opposite of what makes sense is what seems to work most of the time, but that's just how the market is. Like you see some kind of news that you would think would tank a certain stock, and it doesn't even budge, doesn't even matter. And then the opposite, you see a story like Pfizer profits are going to be astronomical based on the vaccines, and then the stock is just, is doing nothing really. So it unfortunately, it sort of triggered in on like this massive couple of day move here, but it did actually, the first day plowed right through the target. So it would have been a good idea, obviously, to just take some off the table that very first day. And so now here it is kind of fading back into the pattern where it was. And so you can see this initial stop has never even moved. It's just staying right where it was there at 38.40. And that's what I mean about a function of price and time. It's a good example actually, because theoretically, like this day that it triggered in and closed up here, I would have expected, or you might have expected, this trailing stop to at least move up a little bit to under the low of that day, but it didn't. And so it would have taken like another day of forward price movement or higher price movement in order for that initial stop to ratchet up. And so it's probably a good thing. Like the fact it didn't ratchet up means that this little low spot here, like this is sort of the cycle low right here. And so as long as the price is able to hang above that, then everything's looking pretty good. So, but I haven't really been I don't follow the fundamentals of this particular company and the vaccine and all that very closely. So it's looking a little bit weird. Big 2 day move, and then all this time sort of retracing, retrenching, and yeah, it's just consolidating here. But it's gonna obviously it needs to turn back up and cycle back up. So this sideways sort of price movement here is a little bit suspect, but theoretically it should work out. It should work out. And the other thing about Pfizer, it just doesn't move a whole lot. I mean, on a day-to-day basis, it's probably, well, we've seen some good movement in it, but there's a lot of days where it just moves a little tiny bit, less than 2%. So anyway, so now we're getting into the ones that have been open for a while that are doing really well, obviously, because the system is going to stick with the winners. So here you go, Shake Shack triggered in over here, actually triggered in right there. Um, just like she basically looks about the same as last week, except for this, right? So it took the other leg higher. I think last week talked about that. And here's a good example of the trailing stop moving up and still allowing enough room for a normal sort of cycle pullback. See when it hit the target, the compensation target, all that. That was great within a couple of weeks of it opening, and then it went in and went into dip mode, and it took this little dip down here, and trailing stop was just far enough away that it didn't get tagged, and then after the dip, you got another sort of explosive move higher, and now it's just consolidating that, and so this trailing stop is, it's ratcheted up. It's still hanging back though, still hanging back and looking pretty good. And so, bigger scheme of things, this looks like an earnings gap down, right? Earnings gap, and we see that quite often recently. Is you see an earnings gap down, and then some follow through to the downside, and then finally the buyers step in, and then you get that change in trend. And so is it kind of looked like an ugly sort of toppy chart, right? And even over here where it triggered in, you could have said, "Well, boy, it looks like, sort of a big ugly topping head and shoulders chart or whatever." But you zoom into just the recent price action here, and that's, this whole sort of stair-stepping higher pattern is beautiful. It's what you want to see. So Shake Shack doing pretty good. As of the close yesterday, it was up 17%. It's up another percent here. So far, so good. Next up on the list is SLAB, and another example of boy. I mean, look at that U-turn that this thing made. Pretty incredible. So you had she's just some odd price action on some of these things. I mean, this sort of gap up right here, all the way back to the previous highs, kind of out of the blue. That was probably earnings, if I had to guess. And then from there, just to sell down like that. Well, I didn't mean to do that. So anyway, what you see here is, big sell down, and then this one actually triggered in kind of oddly after that big gap down day, and sort of a long range day from a gap down, and then that basically kicked off the current rally that we're seeing here. And this is a great example of that's a great example of what it looks like when they work. So you'll notice that we did have one trade that got stopped out for, it was like 4%, 4 point something percent recently. It was a CYTK. And so anyway, my point is that, we get some full stop outs, but typically the stop outs are relatively small percentages, right? And so, you get stopped out for, 4 or 5% on something, not a big deal, because when we do get into one of these that actually, follows through like this. This thing was up 20% as of the close, and you can see that stop is starting to get a little bit more aggressive here, right? That's sort of the idea. And this is a good example of one, like I said, that works right out of the gate, because it triggered in, and then it was basically a straight move to the targets, right? Straight move to the targets, and then trailing stop came up, right shortly after it hit the targets over here. Trailing stop came up, and then there was a really shallow sort of pullback here. It was more just like a sideways consolidation, and then it took off and it hasn't looked back since. And so this, I mean, this current rally that's going on here, this is pretty steep, and so that stop is going to continue to probably tighten up a little bit more aggressively, and with the idea that it's still allowing enough distance for a normal sort of 3 or 4 day pullback in or consolidation without getting knocked out, because who knows? I mean, it could just keep going, right? It could pull back a little bit here and then keep going. And so the idea is that we want to kind of stick with it. There is, you'll notice over here, there is a P stop, which shows up. There's a P stop on this one and Twitter, but parabolic stop means that the stock has made sort of an unsustainable move, and theoretically, what you would want to do is protect, some or all of the position at the P stop. And so, as I always mention here on the show, with zero trading commissions, it's not a huge big deal to split positions up. The buys, the sells, obviously, and so in theory, you would take half off at the target, and then when you see a P stop like that, you could choose to protect half the position at the parabolic stop or all of it, and it's really a matter of discretion. So, and so you look at this and you think, well, 150 that's a pretty good spot to to lock in a gain. But it could come down and tag that easily and bounce around a little bit, and then do something like it did here and take another leg up. And so I mean you could turn around and you could be up here at these highs again. So it just depends. Earnings season's gonna start gearing up here after the 4th of July weekend. So this coming weekend is 4th of July weekend, and I guess the holiday is actually on Monday because the 4th of July is on Sunday. But anyway, so there you go. I haven't marked the P stop on here, but there it is, right at 150. And so let's go to the very last one, which is Twitter. And same sort of thing here. A Twitter's got a P stop right under yesterday's low. I believe, let's see, yesterday's low was 67.93, and so the P stop is 67.75. So, yeah, just basically right under yesterday's low is where the parabolic stop is, and that's pretty tight. I mean, chances are a stop at 67.75 is going to take you out of this in the next couple of days. I mean, you never know, but that's sort of the idea. That's what the parabolic stop is. So as of yesterday's close, from and here's the one I was talking about. I added all this morning, right? I had to add back the trigger and the target, and I added these stops right here. These are the two that I still had saved, and then this one was going back a little ways, but the initial stop and the stops for sort of this first leg of this journey just got lost because I guess I forgot to click save over here when I was doing something, which was the oddest thing because like I said, typically I would expect everything that I have on this chart to stay here, even if I added something else to it and forgot to save it. So, and there's no prompt to save. If I draw something on this chart right now and then just switch to another symbol, it doesn't save it. And so you have to remember every time I draw a trailing stop on here, I have to remember to save the chart. But it was one of those weird things where all of my prior marks on here just disappeared all the stuff that I had drawn. But anyway, so far so good. Twitter was up, like I said, as of yesterday's close, 29%, and it's been open since, well, since 5:20. So it was back. This looks, and I did have the compensation target drawn on here too, as I recall. So this is where it actually triggered in right here at about 55. So you add a buck and a half to that to get the actual compensation target. But anyway, looking pretty good. So there we go. Another example of, and I talked about this last week too, where you get earnings gap down, a little bit of follow through to the downside, and then just a sort of a U-turn. I mean, it wasn't the prettiest chart over here, but that really doesn't matter because it happens kind of frequently. A stock sort of like tanks for whatever reason and looks really nasty, and then when it starts to turn around, I mean, look at this move. And so who knows? I mean, this could have a lot more in it. So this is a case where, like having that P stop in there is definitely going to lock in some profits, right? Which isn't, up 29%. And of course, the position's likely already been cut in half, but that's a pretty big move. So typically, over a 6 month period, we have a few, just a handful that make 30% or more moves. Those are about some of the biggest moves that we get out of the system. And part of that reason is you see stocks that get held for very long periods of time sometimes can make, gargantuan percentage moves, but the way that the trailing stops, I mean that's part of, that's just part of the idea of the swing trading is that the trailing stops are going to tighten up, tighten up, tighten up until they get hit. And inevitably the trailing stops are going to get hit just due to the sort of the nature of it. Now, something like this, you could have a stop at, your entry point and hang on to this for, who knows how long, and maybe it never comes back down to the entry. And so, a year from now, it could be up triple digits, who knows? But the idea of the way the system is designed is that the trailing stops almost guarantee that you're going to be out at some point as soon as you get the first like major pullback, even on the ones that work. And the other thing is that earnings season's coming up too. So I look at my list over here of these open trades in my Thinkorswim, and Twitter's got a little light bulb next to it, and so the earnings are on, I think it's July 22nd. So that's a ways off, but it is coming up. So this will get closed ahead of earnings, and that's another way of sort of cleansing everything out. So earnings season's a little weird because we close any open positions ahead of earnings, and so this one will get closed, over here. It's still a ways off, right? Um, and the thing of it is, Twitter tends to have some really crazy earnings reactions, right? And a lot of them are negative. So over the years, I know a lot of times that Twitter came out with earnings and the thing just tanked. And and a couple of times, occasionally, you get the opposite of it. So this is like some sort of big giant. Yeah, every time I look at a chart, I've been doing this for so long. I look at a chart here and I want to draw a trend line across the lows and a trend line across these highs here. And so, I mean, you got like a gigantic sort of channel breakout. Here, I'll do it just for the fun of it because this is sort of what I had in mind. So, I mean, it's not that big of a deal, I guess, to draw on this thing live on the show, but this is kind of what I had in mind. So there we go. So I drew like this big channel on here, and now it's breaking out of that. And obviously, when you see something like this, it wouldn't be it wouldn't be out of the question for it to come back down and do a little backing and filling, but you just never know. You never know on this. I mean, this is a pretty strong breakout there. And so you can see that this actually triggered in like as it was coming off the bottom rail of this. See, that's another thing that annoys me about these charts, but it is what it is. So it was like coming off the bottom rail and triggered in here, basically for a move up towards the top, and then it broke out of there. So that's looking pretty good. You can't see what I have on the bottom panel here, so I'll pull it up. Look at that RSI. RSI is well, there it is, 77. But, you can see other spots on the chart where the RSI got extremely overbought and the price kept moving up. But typically, you get RSI up over 70 and then it either has to work that off by pulling back a little bit or going sideways, or for, RSI can stay overbought for quite some time. But anyway, it's a little bit of a sign there that the stock's a little overbought. But geez, I mean, huge move there. So Twitter is the big winner so far out of this last batch here. I'm going to, well, I'm not going to save it. I'm not. You can't really see that up there, but let me pull it down. So this is what the top menu looks like. So that big channel that I drew, I'd have to click a couple of times to save that, and I'm not going to save it. So I just want to see what happens, because this is the one where I drew something on the chart or did something and didn't save it, and then all the rest of my stuff disappeared. So I'm going to use this as an experiment here, and I'm not going to save these two lines that I just drew, and then I'm going to come back and let's see what happens. I'll go back to SLAB, and I'll go back to Twitter and see what it looks like. Huh, they're still there. Well, maybe when so that's weird. So it probably has something to do with closing my browser, right? So when I close my browser later on and then come back, these lines are not going to be here because I didn't save it. And it'll be interesting to see if all the rest of the stuff I drew is on here. So, but anyway, so all right, so that's it. That's a look through the open trades. Market still, right up at the highs. Kind of dull here. Usually Fourth of July, there's like Friday's a holiday or whatever, and then you get kind of a dull market going into the holiday weekend. And so with Monday being the holiday, you wonder if like tomorrow and the next day are going to be really dull, or whether next week's going to be dull or what. But markets had, quite a few like really narrow range days. I don't have I could add the volume on here, but I saw some note yesterday that said that the SPY volume yesterday was the lowest of the year. And so, I've noticed that you zoom this thing out. I mean, these little narrow range, kind of nothing days where, the market just kind of seems like there's very little volume and participation in the indexes. It seems kind of weird. So I usually think of the summer doldrums like, after 4th of July, like July and August, typically the summer doldrums month where the market's dull. But we've seen a lot of really sort of dull nothing days recently, and gotta wonder what that's all about. So, but here's the thing, I mean, this drives me crazy. See, I don't know. All I'm trying to do is like zoom out on my chart, but um, here's the thing: as long as the trend is up, as long as the price, and it wouldn't take much of a pullback to violate this trend line. And so, just because a trend line gets violated doesn't mean that the bull market's over or whatever. But until we see that trend line get violated, then there's no. But obviously that can happen fast too. So you never want to get too complacent. But I think the market is more than complacent. But then again, what else are you going to do with your money, right? Feds got your back. They're going to keep. I've seen some charts that basically say, as long as the Fed continues to pump 120 billion dollars a month into the system, as long as the Fed's balance sheet keeps expanding, then the market's going to keep, you know, going to stay strong. So, and that's I'm not even going to get into all that Fed stuff today because I'm more than out of time, but yeah, the Fed's going to eventually they're going to taper their asset purchases, and that's when the fun begins. That's when the market price start to get more volatile. And then eventually, we got to worry about inflation, and so everything's like really weird right now. And might as well throw away your old college economics textbooks because none of that stuff seems like it's even relevant anymore. So, at least to me. So, anyway, it is what it is. We're trading individual stocks which have their own sort of behavior, and so thanks for tuning in. I will see you guys here same time next week.